Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that setup I had on the last episode. Guys, why don't you update? Why don't I update? Guys, it's because there was nothing wrong with the last episode. I had a target here of 64,170. Of course, we had been projecting that we were likely to have a breakdown ever since that 70K area. I did a couple updates up there, and then we've just been tracking this thing falling down. Guys, if you're in the Alpha Commission Discord, of course, we have day-by-day updates, but really, the big picture is kind of good, right? Like, it offers clarity, and these are the key levels that you wanted to be following. If we didn't flip that volatility pivot at 69,630, if we didn't recapture that bull zone above 71,000 and then quickly reclaim that big alpha energy at 73,000, then this move, which could have been a fake out and then just a pump, right? That probably wasn't going to play out, and we would just more likely see that dwindling down to our next key level down there at 64,170. Where are we today? Oh, look, 64,100. So we're pretty much just straddling that bear zone, that line that I gave you as we lost that one up here on the last pool. Now, does it have to be this complicated? Do we have to really have all these lines on our chart here with the very complex definitions? No, not really. We can take off the last momentum pool, and then we can go ahead and just throw on our support and resistance, as long as you can make support and resistance zones. And you can see here on the daily, we did get underneath that Bollinger Band midline, which of course we've just been plummeting underneath it. And when we were above it, look, we just chugged along right to the top of our resistance there in this channel. And so there are so many different ways that you can look at charts, and you can be as simple or as complex as you'd like. But of course, I do give more statistically relevant numbers when we look at my momentum pools. So let's just go ahead and throw on a new momentum pool there, guys. Of course, because we were dwindling down, right, you can see that all of our key levels have reset, and now we have the volatility pivot somewhere around 64,155, which is a good thing. It means if we start putting in a bottoming structure in this area, that we could more easily flip that volatility pivot rather than when it was up here right near the 70s. And of course, if we can do that, we can gain a bias to the upside, especially if we gather our hold momentum and our add and lose momentum, aka the alpha momentum pool, where we just, maybe we duck under here, maybe we play some games, but if we can recover these levels, put in some firm footing and then make those higher lows, while that Bollinger Band midline there comes down and swoops us up, then there's a good chance that we can recapture that big alpha energy, which will give strength of the move to this projection here, somewhere around 67,200. That could have us just pumping up to the bull zone, which of course we will need to flip in order to continue bullishly. And that somewhat aligns with this diagonal over here, which would correspond to a breakout, right, of this some kind of flaggy kind of formation that we have going on here, and that would just take us back to the bull market. Guys, of course, if we do lose this area, if we are not able to capture that volatility pivot, right, if we're not able to find our footing here, if we're not able to successfully retake that Bollinger Band midline, then of course we could be talking about some greater drawdowns. And if we do get greater drawdowns, don't fret, not at least right away, because we could be acquiring a 1 month hidden bullish divergence. There's this zone underneath us from approximately, well, I've marked it out here, so it's approximately 56,920 to 63,100. And inside of that zone, we will have hidden bullish divergence on the 1-day chart here, which does span across 1 month. Now that would be really helpful because we actually have a almost a 6-month bearish divergence building up on the 5-day. In fact, I would say that it's pretty much there, okay? And this is what we see playing out to the downside off of these bearish harmonics, bearish harmonic, bearish harmonic. And while we do have some drives of a Class A bullish divergence here on the 4-hour, just kind of stacking up, suggesting that this is perhaps a little bouncy area. Should we get the breakout from this diagonal? Should we try to attack that Bollinger Band midline here on the daily? Perhaps re-enter my momentum pool and see if we can take a stab at that big alpha energy. Well, of course, that's always possible. Nothing goes straight down. Usually we have some bounces, and so we will need to see that strength come in if we do get that breakout. But in reality, it would be pretty good to get that hidden bullish divergence and just put in our low within this teal box because often hidden bullish divergences can take you back up to your local range highs, and in that case, that's in the 70,000s. So that would be a nice trip to the upside, even if this thing continues to flop over sideways. At least we could have the option to exit some positions or de-risk until we have a more clear breakout. Guys, if we do lose that level, then perhaps some sudden regret will kick in. And, if we do take out this low, there's a good chance that, we could fall even further, perhaps to the low 50s. And then if we lose that, there is the possibility that we could come down and check back into this 40K area. And so that could be quite a dicey trip. Guys, I think I'm going to end this episode there. You do understand the game plan. We're looking for a breakout on this diagonal off of those 4-hour bullish divergences. See if we can recapture that momentum pool somewhere between 64,000 and 65,000 and preferably flip a 65,300 and then quickly 67,200. If we're not able to break that big alpha energy barrier, probably we're going to dip down lower, looking for that hidden bullish divergence between 63,000 to let's just say 57,000, where if we do put in a bottoming structure there, we're going to look back to the upside. We're going to look for some deviation back into this range, even if we tip our toe under it just slightly. Or if we just hit the bottom, we're going to look for some type of recoil, sort of like what I was talking about in the last episode. You can rewatch that. And if we do lose that zone, unfortunately, that could take us lower. So guys, that's your alpha for the day. Stay safe and happy trading.